Hello, good morning everyone, and welcome to our latest webinar in our Looking Ahead series, with this one being Looking Ahead for the rest of the year. I'm Michael O'Brien. I'm a partner here at Kreston Reeves, and I look after our outsourcing service line, and we provide virtual finance team support to high growth entrepreneurial businesses. Also joining me this morning is my colleague John Walsham. John joined Kreston Reeves following a 36-year career with one of the major UK banks. His last role was Deputy Regional Manager of Business Banking in London and the South East. And prior to that, he was Senior Director of Real Estate Finance in London. John provides advice and support to businesses of all sizes to help them secure funding. And that's what he'll be talking about in a bit. Also, our guest speaker this morning is Helen Easton. Helen is Area Director for NatWest Mentor, who provide employment law and health and safety consultancy for businesses of all sizes. Helen has 15 years experience in business consultancy, ranging through finance, learning and development, employment law, and health and safety. Helen will be talking about employee welfare, resilience, and the challenges of adapting the workplace in a post-COVID world. So thank you to you both. Okay, just so those of you who aren't aware who we are Kreston Reeves. We're accountants, tax specialists, business advisors, and a financial planning business with offices across London and the South East. There are 550 of us at Kreston Reeves, and we help our clients grow and achieve their goals. And through our international network of Kreston International, we are able to give them a global reach, supporting them develop internationally and also helping overseas companies set up in the UK. So, as I said, this webinar is part of our Looking Ahead series, which aims to help businesses navigate the current crazy time we're in, and also alongside that, providing them insight of how best to plan for the future. So Helen and John, we'll see you again shortly. Just a quick housekeeping notes. A recording of the webinar will be sent to you all later today, along with a brief feedback survey, which we would be very grateful if you could complete. We want to ensure that we provide you with the insight and the webinars you need, so all your feedback is gratefully received. There will be a Q&A session at the end of the free presentations. And those of you who are registered can post your questions to us through the webinar portal, and I will show you how to do that in a second. If you have a question, please feel free to send it to us throughout the presentations, and we will then respond to them as many as we can at the end of the seminar. Don't worry about asking questions, it's all anonymous. And obviously, if you have a question for one of the speakers specifically, then please put their name, Michael, John, or Helen at the beginning of it, and we will answer and pick that up for you at the end. Oh yes, survey. So those of you who were registered to this seminar early last week would have received a quick survey in preparation for this, just in relation to the effects the last 3 months have had on your business, just to give us some context for what your experiences have been. So some of the highlights on that, so 76% of you have said that COVID has directly affected your cash flow, which to be honest is no great surprise. And due to this, 41% of you think that your business will need a cash flow injection in the coming 6 months. In terms then of how many businesses in the audience have already taken either a bounce back or CBILS loans, the numbers are remarkably similar, with 12% having taken a bounce back loan and 12% also having taken a CBILS loan as well. Finally, we also wanted to get a barometer of people's confidences for the coming period. So we asked firstly how confident you were that your business was prepared to conform with the plethora of new health and safety regulations that are going to be coming in post-COVID. You scored an 8 out of 10 on this in terms of your confidence level, which is pretty high. We then asked how well you feel prepared to manage the change with your employees over this coming period, whether that be bringing them back into the workplace or how best to manage them virtually. Again, you scored an 8 here, which is great. So obviously our audience today is a group of very confident people who manage their businesses well, which is excellent. We finally asked what your key employee issues or concerns were at the moment. And the comments there ranged or centered around really getting your employees back to the workplace, knowing when to bring them back in a safe and manageable way, and also how best to keep them motivated in the current remote working world. So this gives us some context to the webinar today, and some of these themes will be addressed during the presentations. Okay, just quickly on the Q&A. As I said, there will be we'll do a Q&A, full Q&A at the end of the free presentations. This is how you ask questions, so please feel free to ask as we go. So either look for the question mark or the questions drop-down tab on the GoToWebinar portal that you're using, and then that's it. We'll get started. So, cash flow management. I'm going to spend just a couple of minutes talking about the basics of cash flow planning. This could be a day session in its own right, to be perfectly honest. So it's going to be at a very high level. I've also seen that over the past 3 months, you have already taken some actions to preserve and retain cash in your business as this epidemic and the ensuing lockdown has kicked in. So whether that be paying only critical suppliers, whether that be using the job retention or furlough scheme, or deferring tax payments where possible. But if you want to know more about emergency cash flow management and cash flow disaster planning, then please see our article on our website, which the link is on screen, and also have a look through our comprehensive COVID-19 information and advisory hub. Again, the link is on screen, and I'd urge you all to take a look there. It's full of information and insights to help you and your businesses. So, what does the future hold for your business and its cash flow? So just in the last week or so, we've heard from the OECD that the UK economy is likely to shrink by 11.5% in the coming year. And if there is a second peak, that could contract by as much as 14%. Also, the Office for National Statistics released their April report, and that showed that GDP has fallen by a record 20.4% in April. Quite an incredible and alarming number, but not particularly surprising, given that much of the economy, certainly in the retail, tourism and hospitality sectors, were shuttered through lockdown restrictions. So undoubtedly the year ahead is going to be a challenge for all businesses. Even strong businesses who went into this crisis with good cash reserves will likely have seen them considerably depleted in the last few months. So everyone now needs to focus on their cash, preserving it and also using it as effectively as possible. Most economists also feel that the economy will likely bounce back in the next 12 to 18 months. So ensuring your business is in the best position to prosper in that upturn is also critical. So in terms of cash flows and scenario planning, the first questions to ask yourself are firstly, what will the demand be for your products and services in the coming period? And secondly, what will you need in order to be able to meet this demand? That first question is obviously the most difficult to answer. The economy shrinking by 11.4% in the coming year also won't be linear. That won't be 11.4% every month. That's just the overall annualized effect. The reduction in the next 3 to 4 months might be considerably higher than this number, with businesses then starting to pick up in the last 6 months of the coming year. We would suggest looking at expected future demand for your products and services over 3 periods. The next 3 months, the next 6 months, and the next 12 months. And for each of these periods, run 3 different scenarios: best case, worst case, and the most likely or medium case scenario. Certainly in the worst case scenario, we would urge you all to be pessimistic. You need to understand the effect on your business if demand is drastically low. Even if the likelihood is it will never be that low. You should run the numbers so you can understand the challenges you will have and also how to formulate a plan to combat it if needed. Once you've gotten your potential answers and are, as best you can, clearer on the first question, you can start to consider the second question. What will you need in order to meet this demand? What staffing levels, what raw materials, what property requirements, etc. So based on these different scenarios of demand, you can come over the coming period. You can then determine the knock-on effects to your staffing, production, and overhead costs. Also consider how the current crisis has affected your suppliers. Will they be able to meet your supply needs in the short, medium, and long term? How have they been affected by COVID and the lockdown? Will this change their lead time in being able to supply you, or even their pricing to you? There's one thing that's for certain once you've run all these scenarios, is that your scenarios and cash flows will be wrong. They're never going to agree to what actually happens in the next 3, 6, or 12 months. But that actually isn't the point of running these cash flows and running these projections. Undertaking these will help you better understand your business and the various factors and inputs that affect your business and your cash position. The better you understand these elements, and how they interact with each other and your cash flow, the better decisions you'll be able to make and the more agile you can be in your reactions to changes in the market. Whether that be adapting to what the coming month holds in relation to changes in lockdown restrictions, or even how best to react to a second spike, or hopefully in the coming 12 to 18 months, how to react to fully prosper from the upturn. These scenarios will also assist you in taking a more longer-term view of your business, hopefully meaning that your decision-making isn't just focused on the short term or just focused on short-sighted options. You'll also better understand how your business may look over the coming year and where and when any cash shortfalls may arise, allowing you enough time to plan for these and also plan how best to manage these to ensure you get the best possible options. So if you'll likely need some external funding, you will know well in advance and have enough time to look at all the options available. More on this shortly from my colleague John. If you are looking to raise finance, you will need to provide any potential funder with detailed cash flow forecasts and projections as well. So having these available, having these done in a level of detail that you're comfortable with, and actually knowing your drivers that affect these cash positions is going to be incredibly important for you going forward. Just in terms of developing these cash flows and these projections, just some planning points which are particularly relevant right now in terms of the crisis that we're in and COVID-19. So, health and safety. In getting back to work post-lockdown, every business will have to review their operations and premises and ensure that they put in place, where appropriate, health and safety initiatives to keep their employees, customers, and their businesses as a whole safe. For some businesses, this could be a significant additional cost to incur before you have even restarted to trade. So look carefully at what's going to be required for your business and understand how that's going to affect your cash position. Government support. If you have taken advantage of government support to protect your business, then that is excellent and certainly something that you should do if you need to. However, understand clearly the timetables for any repayments or cash outflows. Financial Times reported that they expect 40 to 50% of borrowers to default on bounce back loans. Your goal is to not be one of them. If you have received a loan, when do the payments and interest payments commence? If you have deferred your VAT payment for last quarter, be clear when this payment is now due, which is potentially the 31st of March next year. If you've made any other time to pay arrangements, again, be clear as to when this money needs to be paid back. These liabilities have not been cancelled, they have just been deferred. Property. So the working world has shifted. If your business operates from an office environment, then this crisis has probably meant that your workforce has been working from home for the last 14 weeks. This crisis may well have changed your thoughts around property requirements going forward, and may well have changed what your workforce wants from a work environment, but also what they want from a working from home or working from the office balance in their life going forward in a post-COVID world. So what do you need from a property going forward? When is your next lease break? Has this crisis changed your property strategy in the short to medium term? There may well be significant opportunity over the coming year to change your property needs and actually get a better deal. Landlords are also worried about this shift in property requirements. So again, potentially leading to opportunities. We're already hearing from clients that have break clauses and rent reviews coming up in the next 6 months, that landlords are already targeting them with new lease offers, frozen or even reduced rents, or even offering capital contributions towards office fit-outs, trying to get tenants to stay rather than looking elsewhere for new office environments. And finally, people. Furlough is ending, and therefore an additional cash burden is going to be imposed on most businesses that have taken or have used the job retention furlough scheme. From the 1st of July, you can use this scheme to actually bring back furloughed people on a part-time basis, which is great and incredibly flexible for businesses. From the 1st of August, employers will need to pay employers NI and also pension contributions for those furloughed employees. And the government support then starts to taper down to when the scheme is planned to end in the end of October. So based on your projections, what will your people requirements be over the coming months? Can you use the added flexibility of the furlough scheme from July to bring back people on a part-time basis as you ramp up your business and your demand hopefully grows over the coming months? Do you believe you will, though, be operating at pre-COVID levels of demand once the current furlough period ends at the end of October? Will you need all your furloughed staff back? If not, then your business may need to make some difficult decisions around staff numbers and reorganisation, which again will all have immediate cost and cash flow implications. However, the sooner you start planning for this potential scenario and make assessments of your potential needs, then the more time you have to make changes in your business to mitigate any of these issues as best you can. So, finally, as best you can, run your demand forecast for the coming period. Understand what your cash flows look like under the various scenarios, and plan ahead to fully understand the drivers of your business to be able to better react to the market changes over the coming period. Not forgetting these key COVID-19 planning points, which could all have significant cash flow effects on your business in the year ahead. And once you've done your projections, if you are seeing any cash deficits in the future, you now have time to plan how best to tackle these and plan to source funding as needed. And what better now way to introduce you to my colleague John, who's going to talk about just that in terms of the best way to source funding. Thank you very much.
Good morning, everyone. Hopefully you can hear me okay. Thank you, Michael, for that introduction. My name is John Walsham. As Michael said, I joined Kreston Reeves in September last year, following 36 years in National Westminster Bank, working in the business and commercial banking sector. Since the COVID crisis over the past few months, though, I've been very focused supporting Kreston Reeves clients as they consider their future cash flow needs and their approach to lenders. So, Michael, if you could do the next slide for me now, please. Thank you. So the 360 number there are approximately 360 lenders in the UK marketplace, and believe it or not, providing over 3,000 lending products to SME businesses. So many ranges of options and variability was available. However, due to COVID-19, these lenders have been quite rightly very focused on their existing customer base, which has meant that very few are open actually for new business. So my plan over the next 6 or 7 minutes or so is to cover government supported loan schemes for you at a summary level, not going into the minutiae, but at a summary level, which hopefully you'll find useful, and share with you my observations when dealing with clients over the past few months as they were submitting their applications to the banks. Thank you very much for filling out the survey prior to the webinar. It was interesting to see that around 40% of you are currently looking for funding, and some of you have indeed taken bounce back loans already, and it may be that in time, and I'll come on to that later, you may need to perhaps go again beyond the 50,000 limit on the bounce back loan and look into CBILS lending. So I'll cover both of those areas afterwards as well. Michael, if we could do the next slide, please, thanks. I'll now stay on this slide for a while. So looking at sourcing funding for your business. We shouldn't, before we go into the government schemes, we shouldn't ignore obviously some of the more obvious ways, which is cash injection from the existing owners. I'm sure many of you have injected funds into your business to help support it going forward, or forego dividends, etc. So we shouldn't underestimate the importance of that. Also investors, whether that's family, friends, high net worth individuals, that's still a viable source of funding. There's still many private individuals looking to invest in businesses that they see have longevity through this crisis. You should also not forget that the traditional lenders are still open for traditional lending. Of course, if they can access the government scheme, then that's better for yourself and better for them because they provide the government guarantee. However, lenders are open and providing traditional finance if that is the right answer. And they should look at both options for you to see if that is the correct way forward. And then the final point I really want to stress is don't forget that lenders are very receptive to capital repayment holidays. If you have a sizable debt burden at the moment for your business, a capital repayment holiday of at least 6 months should definitely be available from your lender. And again, we could support with those conversations if you require it. So now just looking at the government loan schemes. The bounce back loan scheme that Michael mentioned a moment ago, believe it or not, £26.3 billion as of last week had been approved on the bounce back loan. That number is rising to around £2 billion a week at the moment. And actually the statistics I looked up this morning, it's now risen to 28 billion. So 28 billion of lending has been approved for the bounce back loan scheme. Just take you through some of the headlines on the bounce back loan scheme. It's, in my opinion, an easy to access scheme. It's an online application. An important part is that you self-certify your validity for that product. The maximum loan you can get is 50,000, as I said earlier on, and it's based around 25% of your annual turnover. So a maximum 50,000 based on 25% of your turnover. Interest rate, very reasonable, fixed at 2.5%. I would say that as an ex-banker, I guess. It'll be over a 6-year term, and there are no repayments in year 1. Very importantly, it is unsecured. The government are providing the guarantee to the lender, and the money after you apply should be in your account within 48 hours. Albeit over the last couple of days, I have come across a couple of clients where the money hasn't arrived yet, even though it's been approved. So we're looking into that for those clients. There are only 20 lenders providing the bounce back loan scheme. All the major banks are on there, and a number of other providers like Starling, people like that. And Metro Bank joined recently, and around about 10 days ago, which is a good addition because they have many, many small business and SME businesses in their portfolio. So bounce back loan scheme, phenomenal sum of money being approved, and we can assume the majority of that has been drawn because the drawdown happens automatically once it's approved. So a significant scheme supporting SME businesses, and I can answer questions about it later on if you wish. Then a bit more detail now around the coronavirus business interruption loan scheme. Statistic on the slide, 10.1 billion has been approved on this scheme, and it's rising by around 400 to 500 million a week at the moment. And again, the most recent stats, 10.5 billion this morning. So a significant scheme. As Michael talked about with regard to forecasts and scenario planning, etc. It is a more complex scheme, but not unnecessarily complex, but more complex than bounce back. You will require some forecasts, as per Michael's comments, and you will need to justify the need for the loan. You can have a maximum of 5 million of CBILS loans in total, and later on I'll explain that in more detail. The interest rate payable, rather than being fixed like the bounce back loan, is risk rated and will be based upon the lender's opinion of your risk profile. So you will see different levels of rates, and again later on I'll come on to that. And most CBILS have no repayment in year 1, most. There are around 90 lenders currently listed on the British Business Bank website who can provide overdrafts, loans, asset finance and invoice finance under the CBILS umbrella, and I'll explain a bit more later on. You can have more than one CBILS loan. I don't think many people are aware of this. So you can have a CBILS loan with your main bank, for example, or your main lender. But you can also have a CBILS asset finance loan from another lender or an invoice finance. We've seen good success rates with the clients we've worked with over the past few months that have taken time to run the scenarios like Michael suggests and share the comprehensive pack of information with the lender. You can expect to need to provide, as Michael touched on, so let's just go through that again. So latest audited accounts, latest management information, cash flow forecast in the different scenarios that Michael talked about, and then really powerfully, and a client a week or so ago did a really good Word document which just explained the COVID impact on their business with really neat bullet points, nice and succinct and focused, and really helped the lender, because at the end of the day, the person who's going to process this application for you, the more you can help them with the content, the greater chance of success. Other schemes, and I will come back again on CBILS a bit later on some other detailed points. So the other schemes are the coronavirus large business interruption loan scheme, which I did well to say. That's had around 2.1 billion approved so far, and you have the coronavirus corporate finance facility. These facilities are for larger companies with over 45 million turnover, and Kreston Reeves, the Kreston Reeves corporate team are supporting clients with their needs, as well as the Future Fund, which seeks to provide matched equity funding. Just pause for a moment, a couple of observations at this point. So that's some sort of high level about the schemes and stuff. So just some thoughts from me around things I've seen over the past few weeks and so forth. So think about, make sure you apply for enough funding for at least 12 months, in my opinion. And it is okay if you did take a bounce back loan in the past few months to plug a gap. So you took the 50,000 because you needed something urgently to plug that gap. It's now okay to go back and look for a CBILS facility, whether that's with your existing lender or with another lender. One client I was working with a few weeks ago was going with the bounce back of 50,000 because it made sense. But when they ran some forecasting, as Michael was talking about, and looked at the key customer of theirs and said, what happens if this key customer changed their order profile? So what happens if they decide 30% off, they'll order 30% less off us? That started to make a big impact on their cash flow, and that 50,000 rose to around 150,000. Now you're all very sensible business people, you all run your businesses very well, so you will understand where I'm coming from. I was just trying to make the point that trebled their borrowing requirement. So finally, on this slide at the bottom is the link to the British Business Bank site. It contains links to the eligibility, useful Q&As, and a search facility, which I think is quite useful. So for example, if you were looking for asset finance in the southeast, because that's where your business is based, it will bring up currently a list of 18 providers for asset finance. Only one of those is a local provider, but the other 17 are national asset finance providers. So providing you with 18 providers. Michael, on to my second to last slide, please. Thank you. So Michael emphasised earlier the importance of taking your time to assess your borrowing needs and put forward a compelling case to your lender. The right first time stat represents the approval rates for bounce back and CBILS. No prize for guessing which one's which. The 81% relates to bounce back loan, which you effectively self-certify. The 50% relates to the CBILS approval rate. So only half of CBILS are currently being approved, which emphasises the case for real focus on your application and the supporting information. However, it is important to stress that if you were a profitable, viable business prior to COVID-19, then you have a very good chance of accessing finance because you were a perfectly viable business before COVID, and that is an important consideration for the lender. Was this business a profitable, viable business prior to COVID? That will give you a very strong platform for your application. The right term relates to how long you can borrow for. As I said, the bounce back loan scheme is 6 years, that's it. Most schemes have no repayments in year one, and most CBILS are available over 6 years, but overdrafts and invoice finance have a maximum of 3 years. Remember, you can make full or partial repayments to any of these loans without penalty. So in most cases, it makes sense to go for the maximum term initially to obviously lessen the pressure on cash flow from year two. On pricing, as I said earlier, the bounce back is fixed at 2.5%. The CBILS is individually risk rated by most lenders. On the CBILS loans that I've seen rates ranging from 2.4% to 6% above base rate. But some CBILS lenders, if you look through some of the more fringe lenders on the site, you will see that some are charging in excess of 10%. So be careful with regard to your searches and understand that pricing will be an important consideration. I think it's also important to mention that with base rates at a very historic low level, maybe moving into negative territory, obviously the loan repayments will move based on base rate moving if you have a variable facility. So when you are applying for your CBILS, ask the lender for both a variable and a fixed rate quote so that you can look at both of those options and make your decision. Finally, it would be wrong for me not to mention the personal liability. There is a lot of press comment at the moment regarding whether the loans will ultimately be called upon by the government or the banks, etc., on the individual. The important point is when you go into these loan borrowing terms, you understand you are liable. For lending over 250,000, there may be a personal guarantee required, and this will be limited, if it is required, it will be limited to 20% of the outstanding balance on the CBILS loan. Effectively, the government provide 80% to the bank, and then you providing the other 20%. So to summarise, Michael, if we go to the last slide, thank you. The key takeaways for me, I tried to keep it brief for you, is take your time to assess your funding needs, and hopefully I've provided some reasons why you should think about that. The other side of it is when the schemes expire. Currently, the bounce back loan scheme does not expire until the 4th of November, and the CBILS scheme expires at the end of September. They will probably morph into some other types of schemes. Let's talk about equity funding, etc., via the government, all sorts of things. But for now, those are the expiry dates. Bounce back 4th of November, CBILS end of September. There are many other lenders out there, but always approach your existing lender first, always. They know you and your history. If, however, after doing that, it doesn't produce the answer you were looking for, then at Kreston Reeves, we have our own contacts, and also we have access to over 100 lenders via an online lending platform, and would be happy to support you in your search. I hope you found the presentation useful, and I do appreciate the burden that falls on your shoulders of all of these different tasks. One of those is obviously the management of employee welfare, which is a vital responsibility, and obviously you have the excitement of all your people coming back, hopefully soon. So with great pleasure, I'll hand you over to Helen Easton, the Area Director for NatWest Mentor. Thank you, Helen.
Thanks, John. Good morning, everybody, and thank you to Kreston Reeves for inviting me to talk today. NatWest Mentor is unique to the bank. It's actually one of the bank's best kept secrets. We are all in-house, employed by the bank, and we offer employment law and health and safety support to tens of thousands of businesses of all sizes and sectors. Since March, since the beginning of the coronavirus pandemic, we have been delivering weekly webinars answering questions on the job retention scheme and also returning to work. I noticed it's really interesting from the Kreston Reeves survey results that there are some key employee issues on your mind, and our webinar feedback has given us the knowledge that business owners and managers are feeling very lonely, so they find it really reassuring to understand that everybody is in the same boat and you know, asking the same questions and facing the same issues. We've heard Michael talking about cash flow. We've heard John talking about ways to support your finance. We've had 3 months of rapid change, uncertainty, a bit of confusion maybe some places, but most of all, 3 months of pressure on business operations, finance, staff, and most of all, pressure on management to make decisions quickly and effectively. So we've had terms like unprecedented. I've banned that use of that word in my team, and phrases such as new normal. Just the use of those phrases alone can cause anxiety and stress among staff. So what I propose to cover this morning should help either to reassure you that you're on the right track, or perhaps prompt you to revisit your plans. Can I have my next slide, please? Many businesses haven't actually ever stopped working during the pandemic. Some have even actually experienced growth or chosen diversification. Whatever the situation, working practices for most will have had to change in some way. And as a country, we've all learned that old sort of new word, or new old word, whichever way you want to, of furlough. To be honest, look, if we were all great at adapting and accepting change, there would be absolutely no need for change managers. But look, we've come to be, you know, we've all had to become change specialists in the last 3 months, and now more than ever, we need to apply these skills effectively. So let's talk about the practicalities. Next slide, please. I've already mentioned change. And as a result of any change in your business operations, you do need to review all of your company policies. Risk assessment and safe systems of work, you know, are essential to make sure that they are still relevant to you and to your business. Has your business model changed? Do your policies reflect your current practices? And if you plan to retain some of the changes that you've implemented, you may need to permanently change some of your policies. Let me give you an example. If you've had to ask, so the bank, for example, has got more than 50,000 staff working at home at the moment. And from an interim perspective, if it's just a temporary thing, you don't necessarily have to do a risk assessment or a display screen equipment assessment. However, if you then do choose to make it a permanent situation, you will have to look at your staff contracts, and you will also have to do the health and safety side of things as well. Your COVID-19 risk assessment, that is essential for all businesses, and there is a notification if there are more than 50 employees, it should be published. We've seen some businesses actually put an element of their risk assessment on their websites, and that's a reassuring thing. There's loads of good government advice out there on the government website, on the HSE website, and also, believe it or not, on the NatWest Mentor website, we've got a system called Mentor Live, which has got that you can register for free, loads of templates on there, risk assessments and things that you can get to help you with all your various risk assessments. In an ideal world, the guidance from the government was for people to work at home where possible. So premises may well have remained empty. Now, it doesn't matter who the responsible person is for your health and safety. Ultimately, the responsibility lies with the owners of the business. So whoever that responsible person is should have been making inspections of the business during the last 3 months to ensure that the building fabric is safe, to ensure that the insurances are in place, and before you open back up again, take a look at your utilities and appliances. Are they safe? Have they been maintained? Do they need a check? Look again also at your fire risk assessments, your Legionella assessments. Just make sure that everything is absolutely how it should be. You might want to arrange a deep clean of the building. Look particularly at your communal areas, or obviously approach a landlord if you're in rented accommodation. Consider your plans for access. Are you going to be able to have one route in and one route out? Can you socially distance people when they're back in the workplace? Can you follow the sector's guidance that the government have published? And the key to all of this is about communication. Mentor talked back in early April about dynamic risk assessments. Now, realistically, that's a very fancy way of saying look at things regularly and update your risk assessments, and share your operational plans, whether it's by email or Zoom, video calls or posters on the notice board, however you choose to do it. Share those operational plans and decisions, those that will reassure staff that you're thinking about them and their welfare, as well as how the business is going to operate. We've been talking the last 3 months about communicating twice as often for half the usual amount of time. Can I have my next slide, please? So now let's think about the people and the employment law side of things. It seems obvious to put, who, where and when, but thinking about your premises and your business as a whole, Michael's already talked about that planning. If you're going to implement social distancing, do you need to have all your staff back in at once? Can you implement a rotational shift pattern? Do you need everybody at all? What can be done remotely on a more permanent basis? And thinking about it more widely, what can be left undone? What are the things you don't need to do anymore? It's too late now to put anybody new onto the on furlough, because that element of the scheme has closed. So you do really need to plan ahead for how you're going to use the job retention scheme to best support your business. There is plenty of help out there. Again, I've already mentioned the Mentor Live Coronavirus Hub, which is dedicated to letters, templates, and all sorts of resources that can help you with staff retention and furloughing. I would say that if you're going to change any terms and conditions for your staff, I would take really good advice, go and seek some advice. I've put on there restrictions and vulnerabilities. That's because over the past 3 months, we've been inundated with questions from people about, shielding vulnerable staff, people with vulnerable relatives. And many people are shielding well into August. And even then, you've got the anxiety and the fear about returning to workplaces and public areas. So as managers and employees, do tread carefully. Make your risk assessments robust. talk to your people. There will be some with childcare challenges, there'll be some with caring responsibilities. You know, be open to their suggestions of what they can do and what they do feel comfortable with. I mean, we understand, look, there will be those who don't want to return to work after furlough. Start those conversations early and learn to compromise. And where you do find issues, and you will, that's guaranteed, where you do find issues, go and get good advice before you choose to discipline or dismiss. Apologies for the loud noise in the background. Let's talk about expectations and goals. Many questions we've had are that managers don't trust their staff to work as hard from home. You know, they can't see what they're doing, they don't know that they're being effective. And, you know, and also they're worried about, in the constant change, how they can maintain motivation. So this is where, if you've got them, your performance management systems should kick in. You know, make sure that your staff know what you expect of them, be it daily, weekly, monthly. Have those set objectives and goals. And even though during the pandemic these might have changed, it's really important to have those goals and think about, are they reasonable? Are they achievable? Have you been open to some negotiation on them to amend people's objectives? And really rewarding and recognising staff for positive performance and behaviours is a key motivator, and does help you to sort of, if you're keeping in touch with your staff, helps you to track where they are and how they're feeling. One thing I would ask you all to think about is how confident are you with managing performance? How confident are you with having potentially difficult or awkward conversations without it escalating into some form of dispute? And now is a really great time to review all of your staff training and capability, particularly among your management. And the furlough scheme does allow for training, and there's tons and tons of good stuff out there that you can use, and a lot of it is being given away for free, so take full advantage of that. And back to communication again, furlough encourages everybody to stay in touch. It's really important. And as I've already said, twice as often, but half the duration. You know, you'll know how your people are doing if you've kept up with them. We found that for some people, working from home has allowed them to flourish. Let's be honest, they've saved money on commuting for a start. They're being more productive and really enjoying this option. But for others, the stark reality is it's been a little bit like a prison sentence. You know, they might not have the appropriate working space. I have come across many staff who have actually been sitting on their beds working. That's not ideal. Some people, you know, live alone, so they miss the office environment, they miss the routine, or there's something specific that they miss about coming into work. And for those who have been furloughed, you know, you'll need to be telling them when you want them to come back to work and what will happen when they come back. You know, you can't expect them to turn up next Monday, or if you're allowed to open from the 4th of July, as we heard all the announcements yesterday. You know, you can't expect them to turn up on Monday the 6th and know how things are going to work unless you have already communicated what your plans are. You know, otherwise you'll end up with total chaos. My final slide, please. My next slide. Thank you. I thought it would be useful to give you the 5 points that we've been talking about over the last 3 months. They're really key: the plan, communicate, listen, adapt, and review. We're about to publish a case study of a business that has changed their operations 2 or 3 times during the pandemic because they've been forced to adapt to the different situations that have developed. You know, Michael and John have both referred to planning. We literally cannot stress enough how important it is to think about the what ifs and then the impact on your staff and your business of those what ifs and the different scenarios. Planning should also include your communication plan, so a plan of a plan, if you like. And best of all, when you do communicate, listen to what your staff have to say. You know, give them the opportunity to give you that feedback, because we found that more often than not, they've got as many good ideas and solutions as you, the management, will have yourselves. and be prepared to adapt your plans and review them. At the start, I talked about a dynamic risk assessment. I'm aware that some businesses were actually risk assessing daily back in March and April, and that's what I call serious reviewing. You know, this is a challenging, exciting, stress-inducing time, but if you do talk to your staff and your managers and remember that none of us are alone in this, you will find a much deeper resilience than you ever thought possible. Can I have my next slide, please? What I've done in the slide pack that will come out to you is put a whole wealth of websites that we've been using over the past few months. The top one there is NatWest Mentor's website, where you can get free access to Mentor Live and the coronavirus resources. And the NatWest Hub has all the playbacks of the coronavirus webinars that we've done over the last 12 or 13 weeks. And all of the rest of those websites are really useful. We've included NHS Every Mind Matters for your well-being, as well as the government guidance for all the various different sectors and the checklists that you might need to come back into work. So that leaves me to say thank you, and I will hand back to Michael.
Thank you, Helen. Thank you, Helen. That was brilliant. Okay, right. So to summarise, here are our top 5 takeaways. And you'll be all of you will be getting these as part of the takeaway pack and on the email later today. So skimming those, scenario planning, assessing your funding needs. The sooner you know, the easier and hopefully the better it will be to get that funding. Approach your existing lender first. Plans, make plans. Planning is key. Be critical and be challenging in your planning. And communication internally with your employees, making them feel confident in the business and how they may be returning to the business, or how that business is going to need to change over the coming months in this post-COVID world. Okay, just before we get to Q&A, just to remind you that we have another webinar in our series coming up on the 22nd of July, which focuses on business growth, innovation in these crazy times, and also routes to market. So please have a look on our website and booking for that. So Q&A, we've had a number of questions coming through. I'll pick up the first one, which actually is around cash flows, and it's around actually how to do them in basic terms, in terms of is there any good quality software, or how would you suggest going about creating and developing good quality detailed cash flows? To be perfectly honest, there's a lot of software out there on the market. Certainly if you use accounting systems like Xero or QuickBooks Online and other online accounting systems, there are a number of different software platforms that you can bolt onto that to help you with forecasts and cash flows. Best that we use, certainly for our clients, is something called Futurely, F-U-T-R-L-I. That's probably further down the roadmap in terms of its development, allows you to do various freeway forecasts and the like. Can be incredibly complex, incredibly difficult to pick up at times and understand what's going on. I have to be honest, generally we like using Excel. Actually, if you're, as a business owner, you will understand the assumptions and the drivers of your business far better than any software. So certainly initially, we actually like to start modeling things relatively straightforwardly and relatively simply on an Excel type spreadsheet. We may evolve that and develop that into software. It's probably fair to say that the software for forecasting cash flows hasn't really kept up with demand and with needs and expectations, certainly. So don't be scared to use Excel. That's completely fine. The most important thing about all of these is your understanding and knowledge of the drivers and the assumptions that you're making in getting these forecasted numbers out, not necessarily the software or the tools that you're using to create those numbers. So that's me. John, did you have a question that came through to you?
Yeah, hi. Yeah, there was a question regarding a client asked for a selective invoice discounting facility and it needed a personal guarantee. And what did the panel think about the need for a personal guarantee? From my point of view, I can see where the question is coming from around the asset is the debtor book, and therefore the cover is there for the lender around the debtor book. my experience is that you would tend to see certainly a partial guarantee. So if the client had a 200,000 line, you might have a guarantee of say 50,000 or something like that. But it isn't actually that unusual to have a full guarantee possibly as well. And in the current environment, you can understand probably the lender being somewhat cautious seeking the guarantee. But I would like to think with negotiation, I don't obviously know the background, I'd like to think with negotiation, you could make that personal guarantee a partial guarantee rather than a full link to the full facility.
Helen, did you have a question, Helen?
Yes, I've got one come through that's asked about whether or not it's okay to make staff redundant during furlough. And the simple answer is yes, you can make staff redundant whilst they're on furlough, but I would strongly advise getting some professional advice before you do so, because you can't just choose the ones that are on furlough. You've got to have a good solid business case and selection criteria.
Cool. One that's just come in, I guess actually John and I can probably have a go at this together. I've done my various forecasts. Which one do I share with a potential lender to get either C-bills or other financing or lending? I guess to start with, from a cash flow forecast perspective, it kind of depends. All of these forecasts that you're doing need to, if you're showing into the bank, they need to show your requirement for the funding. If you're looking for 100,000, 250,000, whatever it might be, these forecasts need to show the fact that there is a hole there that needs support from the bank or from the lender. And also it then needs to show how by having this funding, the business will be able to develop and grow and be able to then support the repayments going forward. So in blunt terms, you show them the forecast that shows that. John, I don't know if you want to extend that anymore.
Yeah, I think it's an interesting challenge, isn't it? You've run your different scenarios. Am I a bit scared to show the bank the worst case one? Coming back to my original point about you were a viable business prior to COVID. You were a viable, profitable business prior to COVID. You were being supported. You felt your bank was with you. There is no reason I would like to think that you can't share your different scenarios with the bank and say, and on balance, I therefore feel this is the number that's appropriate for me with regard to my business, because that balances the parts that I do know. And let's be honest, not many of us know about the future at the moment. These are the parts I do know in terms of existing customer orders, and these are my expectations around in future orders, and therefore I've knocked 20–30% off that just in case there's a second wave or something like that. So I think it is a balance. I'd like to think most of the time the relations will be strong enough that you can share that broader conversation. However, I do understand sometimes people have never met their bank person, and therefore it is a challenge. So I think that's where you draw on professional help to understand what would be a sensible number. What has driven some people, I think, is going for below 250,000 so they don't have to give a guarantee. That can be dangerous in months to come if cash flow requirements are greater. So I think it should be about what do I believe I do need, and sharing that openly with good explanation as to why you think that's the right number.
And I think that's a fair point in terms of the banks. You know, they're not just going to look at these forecasts and cash flows, they are going to look at the history. So if you were a pre-COVID profitable, well-run, well-managed business, they will be looking at your management accounts and your audited accounts alongside that. And actually, if your forecasts show, you know what, the next year is going to be tricky, we are going to have cash requirements and funding requirements, but actually in 18 months and 24 months, we think we're going to get back to pre-COVID levels of profitability and cash flow, then as long as everything stacks up in that regard, then they'll look at the picture as a whole rather than just your worst case cash flow and think that looks pretty rough. Well, of course it does at the moment with the level of uncertainty around in the marketplace. But if you're saying in 18 months, 24 months, you will be back at pre-COVID levels, and your funding request then supports that in terms of being able to repay that in 24 months or 36 months, then that's what the banks look at as a whole picture rather than just one document.
Yeah, sure. Helen,
did you have any other questions, anything to add?
I can't add anything to your finance one, to be honest, but I've got a nice quick one. It's about whether or not we can wedge fire doors open to save having to wipe them down for everybody that's going through them. Very quick, easy answer. No, they're fired. That's what they're there for. The only time sort of social distancing can go out the window when any kind of fire, with any kind of fire related activity, is if there is some kind of fire alarm and actually a fire on the premises, then everybody just needs to exit as you would normally, and then you can put your social distancing back in place once you get outside, but don't wedge your fire doors open.
Actually, Helen, in terms of actually virtual working as well going forward, I guess for some businesses, the working from home or working away from the office is going to continue. In terms of what companies are responsible for going forward then, in terms of IT kit, but also office kit for the home, in terms of how to make employees' lives easier at home, where does that responsibility lie, and how might that look over the coming months as this continues?
So again, it's like I said, if it's temporary, then, you know, all businesses need to do maybe would be to provide a laptop or something like that. If it's going to be permanent, then the business needs to look at what do their staff reasonably need in order to be able to work from home, and, you know, looking at that whole display screen equipment setup, you know, you have to look at what they need. Now, you couldn't expect every employer to provide every employee, you know, a beautiful home setup, and let's be honest, you know, a lot of desks and things like that are too big to go into most people's houses. So I think you have to have that two-way conversation with your staff to say, we're prepared to provide you if you want to work from home, and actually, or if we want you to work from home, we will provide this and this. And then you move on from there, because, you know, from in your world, you understand that can have a huge capital outlay if you're going to then suddenly provide people with a, you know, like me, I've got an office chair and a desk and a monitor and a printer and all that sort of stuff. That's huge. So I think you've got to be reasonable and have that conversation and look at what you need. But the responsibility is with the employer.
Cool. I've just got a couple, Michael, if that's all right. Yeah, so could I repeat the dates when the loans are available? So the bounce back scheme is currently due to expire on the 4th of November, and the CBILS scheme expire at the end of September. So that's just clarity on that. There is another question from a client regarding their bounce back loan that seems to have gone wrong in terms of the funds going into a different account or whatever. So for the purposes of that one, if the individual, I haven't got the name here, but Steph has, if that individual, you're going to pop up the email addresses later, aren't you, Michael? Yeah.
Yeah, I can do that now. Actually.
So if that person wants to email me, because obviously if we get into the conversation, it could be confidential. So if you want to email me, then I'll put you in touch with someone at HSBC.
And there was also a couple of questions that were floating around from a charity, I believe, which is great. None of us are particular charity experts, but what we will do is we will, if you can email myself as well, we will put you in touch with our charities team, who are probably far better placed to answer those queries than we are, and they'll be in contact with you. We are just coming to the close, nearly 11 o'clock. So has anyone got a quick, short 30-second question that they want to answer? If not, we will draw this all to a close. So thank you all very much for your time this morning. We've hoped you've all found some useful takeaway points from this. As mentioned, you will be receiving this webinar and a short feedback survey later today. Should you have any further questions on any of the topics raised or covered today, then please do get in contact with us. Our contact details are on the screen. We'd be more than happy to discuss any further questions you may have. And finally, thank you, take care, and hopefully we will all see you soon. Thank you very much.